What's up, everybody? Today we're going to be taking a deep dive into the current states of my stock portfolio, and I'll be talking about what my plan for the rest of 2024 is. I'm going to show you exactly how much I've made or lost in each of my positions, and exactly how much my account is up in total since I started investing around 5 years ago. If you're new to the channel, my name is Sheldon, and I make completely transparent videos showing how I invest in the stock market. If you're interested in growing your own portfolio, subscribe to the channel, and let's go on this crazy journey of investing together. Also, I want to mention that you should not go out and buy stocks just because you might see them in this video. Use this as a resource to help you learn. As an investor, you should do your own due diligence. Don't just buy stocks because I have them. Okay, so I want to start by talking about my overall portfolio strategy and how I'm going to invest for the rest of 2024. Then we'll get into each individual position in my portfolio. I would call it sort of a long-term stock ETF hybrid growth strategy, I guess you could call it, and I have a total of $60,961 invested in the market right now. And since I started investing in stocks, I'm currently up $12,461, or 25.69%. Around 40% of the portfolio is in S&P 500 tracking ETFs, mainly VOO, and the other 60% is in individual stocks. And basically, the reason for this ETF stock hybrid strategy is basically just to mitigate risk. As I've built my portfolio, I have learned it's not very fun to see it disappear and get cut in half. So that has happened to me before with a lot less money in the market, but it still sucked at the time. So I started investing around January 1st, 2020, almost 5 years ago now. Which was right before the COVID crash. And those of you who are paying attention to the market in 2020 and 2021 know that you could pretty much have bought anything and made money. I was buying all these stocks and making money, thinking I was a genius, and then the market obviously crashed in 2022. That definitely changed the way that I invested, I think for the better. And as an investor, it's important to learn from your mistakes so you actually become better at investing over time. And when the market bottomed around late 2022, that's when I started buying VOO and actually made the decision to hold around half my account in S&P 500 ETFs. Especially now that I have a bit more money in the markets, I just personally sleep better at night knowing my accounts are a little bit safer. That being said, I do still love to pick individual stocks, and I do think it's a viable strategy that you can make money in the long term with. It does take a little bit more time and a little bit more energy and knowledge about the market that you have to put into it. But it does pay off, and it's a lot more rewarding when it does pay off with individual stocks because you did your own research and you made that bet. And you have the potential to actually beat the market, not just track it. And that is sort of a brief overview of what my current strategy is in the markets. And to be honest, for the rest of 2024, I don't really see it changing much. I just worked all summer, and for the last 4 months, I was able to put a lot of money into my accounts. And now, sadly, I'm going back to school for the next 8 months. So for the next 8 months, I won't really be able to contribute a lot of money into my accounts, but I'm comfortable with how I'm positioned in the market. And it'll be interesting to see how my portfolio performs while I'm in school for the next 8 months. And hopefully when I graduate, I can get a job right away and start putting money away again. But until then, I do still plan on making videos and updating you guys with how my portfolio is performing and just some other general finance content. Now let's get into my individual positions. I'm not going to have time to go in depth on all of them. I do have some other videos on my channel going more in depth, so you can check those out if you want. So we're just going to go down the list here. Starting from the top, it's going to be the higher market value positions, and then as we go down, it's going to be the lower market value positions. There's 2 separate VOO lines here because they're in separate accounts. But the first stock that I want to talk about is Palantir. So obviously I have a pretty crazy cost basis on Palantir at only $8. It's now sitting at $31, and it's definitely been my most successful investment up until this point. At 278%, I've made close to $4,000 on the stock. You know, it's a data management company. They are really highly valued right now. I think they have almost a 200 PE ratio, which is pretty high, which worries me a little bit about how it's one of the top positions in my account, but I'm keeping a close eye on it, and I continue to watch their earnings, and they do continue to come in with growth numbers that are just pretty crazy for a company, to be honest. So I got pretty lucky with Palantir. It's been definitely the best stock I've owned up until this point. I don't plan on selling it anytime soon. Excuse me. I don't plan on selling it anytime soon. I'm going to continue to ride it out. I think the company has a lot more room to grow and can be one of the biggest software companies in the world. They have really cool marketing. I believe in Alex Karp. He's a really smart dude. He's the founder and CEO. So yeah, I'm just going to keep riding it out with Palantir, see where it goes. I have currently 160 shares. I don't think I'm going to buy any more anytime soon, just because it is a little bit of a riskier play and it is a bigger allocation in the account. But we're just going to keep it where it is, see where the stock goes. I'm sure it'll go up and down here and there. But I'm just not going to touch it. And I probably won't touch it for, honestly, a couple years. That's my current plan with Palantir anyway, and that's my plan with a lot of these stocks. If you don't know, I'm a long-term investor. I do not play, I don't play trades. I don't get in and out of stocks. I don't really touch penny stocks. I just buy good companies, which is what all of these are, and then, sit in them for the long term. So that's Palantir. To move on to Meta. Meta is obviously Facebook, Instagram. It's one of the biggest digital advertising companies in the world. I think, I might be wrong with this number, but I think around 98% of their revenue, straight up comes from digital advertising. And it's just a profit beast, Meta, to be honest. It's just a massive beast company. I have 8 shares at a cost basis of $253. It's currently sitting at $521. So this has also been another really good stock for me, currently at just over 100% up. Mark Zuckerberg, he's a controversial guy sometimes, but I like him, and I think that he is definitely the right guy to keep driving Meta forward. You might look at this and you might say that the top 2 positions in my accounts are relatively risky and pretty volatile, and that's why I still call my strategy a growth strategy, because these companies are just 2 beast growth stocks. The numbers that they've continued to grow at in the last couple of years has been crazy, and I've owned both of them for a little over 2 years now, I want to say. So I'm not new to being a Meta shareholder. I think Palantir is a newer position than Meta, but yeah, just like Palantir, I'm not going to sell this one anytime soon. I do expect it to go up and down. It's a volatile stock, Facebook and Instagram. Any social media company is going to run into its controversies. They're going to be, battling with the government, fighting lawsuits all the time. But as a position to own, Meta really is just a good stock. It's a profit beast, like I said. Their revenue growth, they still have user growth on all their platforms. They have over billions of people use their products daily. So I don't see Meta going anywhere anytime soon, and I am going to continue to be a shareholder, and I am a happy shareholder. I've made some good money in the stock, like unrealized gains, I guess, but yeah, I don't plan on selling it anytime soon. All right, to move on to Apple, this has been another pretty good stock for me. I currently own 14 shares at a cost basis of $143, and the stock price is currently sitting at $229. I'm up 59% on the stock, a little over $1,000. And I mean, I'm just a little bit of an Apple fanboy, I guess you could say. I'm really deep myself into the Apple ecosystem. I have a MacBook. I'm recording this on my iPhone. All the video in all my videos is recorded from my iPhone. I have an Apple Watch. I got AirPods. I just love their products. They have some of the best products. They have some of the best technology products in the world, in my opinion. A lot of you Microsoft guys out there might not agree with it. I have a lot of friends, and in school, actually, a lot of people in school don't like Apple products. And I get it, they're very proprietary, they're expensive, but I just believe that they are the highest quality technology company in the world. Tim Cook is a good guy to drive it forward after Steve Jobs. Sales have dipped, I think, recently for the iPhone. I'd have to go back and look at their sales numbers. Berkshire Hathaway has been selling, Warren Buffett's been selling some Apple stock, but I think Apple's just such a good play in the market. It's such a safe stock. And it's going to continue to go up slowly. It's one that you don't expect crazy high growth from, maybe like Palantir. Like, I'm not expecting my Apple shares to go up, 300%. I think it's just going to be a slow grower. People with iPhones are going to continue to buy iPhones. I'm going to continue to buy iPhones. And I just like Apple as a company. And to move on to Nike, this is one of a newer position for me. I just started buying it this year, and I'm currently down around 8%. I got 36 shares at $90, and it's currently sitting at 83% $83 right now, the share price. I could continue to buy Nike shares. I like Nike as a company. The brand recognition that it has is just insane. They sponsor some of the best teams, some of the best athletes in the world. And yeah, I mean, their revenue has been struggling. I know they came in with some pretty weak growth numbers. I think they're going to be able to bring that back up. I believe in Nike as a brand. The Jordan brand, Converse brand, they own all of that. And yeah, I just, mainly Nike is, I wanted exposure into a little bit of a different market with Nike. I love their shoes. I love their clothes. I think they have high quality gear that they make. And their stock has struggled a lot in the last couple years. It's been down. I think it's down on like a 2 or 3 year basis. But I think anyway that I'm getting in at the bottom, and in the next year, 2 years, their stock price could definitely be up over $100 again. Google is obviously another digital advertising play. They own two of the biggest search engines in the world, YouTube and Google. If you're watching this, you're on YouTube right now. Google owns that. All the ads that you see on this platform, Google makes money from. All the ads that you see in search, Google makes money from. And it's kind of like Meta, where they're just a profit beast because they have the user base and they just sell advertising. They're also a really good technology company. They're one of the leading companies in the world when it comes to development talent. They have some of the best developers in the world working on their products. It's a bit of an AI play as well. They've had a couple of flop releases, with some of the AI products that they've released so far. They haven't been stellar releases, but, I believe that Google is one of the top companies in the world. They have some of the best talents, and they're definitely going to be a leader in the AI race. So it's a bit of an AI play. Digital advertising play, have massive profit margins on Google. They have a really good cash position on their balance sheets. And I'm just kind of trying to remember a lot of the financials behind these companies. I'm not actually looking at them right now. I'm just kind of looking at my screen as we go here. So forgive me if there's not the most in-depth information here. I'm just kind of giving a brief overview of why I own the business. And that's another important note, actually, that I want to make. When you're buying stocks, you buy businesses. Don't look at it like you're buying stocks. This is something that I've learned from Warren Buffett. Just buy good companies. It's like I said, it's why I don't buy and sell and get in and out. You just buy in, and unless something fundamentally changes in that business, just hold the stock. And you'll make money in the long term. I have made a lot more money than I've lost. Clearly, there's a lot more green here than red. And that's why it's the strategy that I want to teach here on my channel. Just that long-term stock market investing strategy. That's the message you're going to get here. Sorry, that was a little bit of a tangent, but to get back to it, JP Morgan. This is a little bit more of a stability play, kind of similar to why I own VOO. I just didn't have any financial stocks. And JP Morgan is something that basically tracks the broader economy in the US. I've listened to Jamie Dimond interviews before. He's the CEO of JP Morgan. I'm currently sitting on 12 shares at 143 cost basis, and it's currently at $224. I've been in JP Morgan for years now, like 3 or 4 years in total. I think I've been buying JP Morgan stock for. So probably just going to continue to hold that one. Bit of a stability play. Same thing with Caterpillar. This is another newer stock like Nike. I just started buying this one I think a few months ago. And I kind of just wanted exposure into the industrials market. I've been looking to diversify my portfolio a little bit more. And Caterpillar is just a business that I think you're always going to need in the economy. They got the dozers, they got all the heavy duty equipment that, you need to build infrastructure. So if like the government passes a huge infrastructure bill, a company like Caterpillar definitely benefits from that. And, it's just a construction, engineering, manufacturing business. And I think it's one that the world is always going to need. And it's why I bought it as a stock. They have strong financials. They just make some really cool tractors, or not tractors, but heavy duty equipment. Maybe I guess you could call it tractors. I don't know. They also make locomotive engines, I believe. So cool company. They build cool products. They do things that is essential for society to operate, and that's why I just don't see the business going anywhere anytime soon. Which is basically my thesis for a lot of these stocks. I don't see them going anywhere, which is why I hold them as a stock. And Caterpillar, just good company, solid business model, and something that the world just needs. It's not going anywhere anytime soon, so I plan on holding that one for a long time as well. So Berkshire and VIOG I hold together in a separate account. I hold it in a first home savings account because, Berkshire is a relatively safe play. And the investment time horizon of that account is a lot smaller. So I just wanted to buy things in that account that, nothing was crazy volatile, and just something that's a little bit safer because I'm going to use that money relatively soon. Not relatively soon, but within a few years, I'm going to want the money in that account. So I just wanted to play it a bit more safer in that specific account. So that's why I own Berkshire in that account. And VIOG adds a little bit of volatility, maybe just because it tracks some small cap. I think the S&P 600 small cap index. And there's a lot more. I think there's more money in Berkshire, than VIOG. So, these two positions combined make up that one account. So, they're just relatively safe plays, and VIOG adds a little bit of volatility into that, and take advantage of that small cap, and that growth stock, the small cap and growth stock trends, I guess you could say. So that's why I own those two in its own separate accounts. And this whole list right here is every single account. I have 3 total, and just every position in aggregate. And to move on to MDA.to, this is a Canadian space technology company. I just made a video about it in my growth stocks video. This was one of the stocks that I talked about in that one. It's definitely a relatively small position for me. I only have a total of like $1,100 Canadian in the stock. 74 shares at $11.11, and it's currently sitting at, almost $16. I'm up 42%, which is not bad. This is a business that I just personally have, some interest in. And their mission is in space technology and space electronics. Like I said, I'm going back to school. I go to school for electronics engineering. So this is a business that I have a little bit of bias towards, just because, they build space electronics, and it's an industry that I'm interested in even potentially working in one day. So I'm interested in MDA from not only an investment perspective, but a technology perspective as well. So that's why I also have it as a little bit of a smaller position for me because, I don't have such high conviction on it from a financial perspective. but I do believe in their overall mission, and it's a Canadian company, which I find cool. And I will probably buy more MDA stock at some point kind of soon. Maybe if I was to add shares of anything, MDA would be one of those companies that I want to share or add shares on because, even financially, they are doing well. They are growing revenues at a high rate, and I would consider them a growth stock. So for now, not selling. Would probably add a couple shares of MDA in the next few months here, especially if the stock dips. But yeah, just keeping that a relatively smaller position compared to some of the bigger dogs in the portfolio. And that leads me to my last stock, Lemonade. I have lost 37% in this one. And guys, I have also made other bad investments. PayPal was one that I lost a lot of money in. I think I lost over $1,000 in PayPal. So, it's like the way my portfolio looks right now, it looks like I don't have too many losers, but I have had more than that in the past. I've just sold them and got out of them because maybe there were stocks that I bought just kind of on a whim, because I saw someone else buying them, which is why I use that as a message in my videos. Don't buy stocks just because I buy them. I've lost money doing that. But Lemonade is an insurance company. It's sort of trying to modernize the insurance industry, which I thought is interesting because a lot of insurance businesses are just so legacy and they're good. They make a lot of money. They're profitable businesses. But sort of their systems and their operations are just so slow and old, and I thought Lemonade would be a play to, that can sort of revolutionize the insurance industry. And I mean, I've been debating selling it. It's just kind of sat in my portfolio. It's such a small position that it almost doesn't really matter too much, and I'm trying to think of what I would rather do with the money in this stock. So I might sell this one soon. I'm going to do a bit more research on it. I haven't looked too deep into it in a little while here. But yeah, I'm just going to continue to hold this one until I do a bit more research. Then I'm going to decide to maybe sell it. I don't think I'm going to end up buying more of it, but I mean, who knows? Maybe I will. But I'll wait. Maybe I'll make a video. If I decide to do more, or if I decide to start buying more Lemonade, then I'll make a video on it and talking about my bullish thesis. And maybe even if I sell it, I'll make a video on it. I do think it's a cool business. They have good marketing. But it's just kind of sitting here at the bottom of my portfolio as I've lost a bunch of money in it since I started. But that is the whole list of all the stocks in my portfolio currently. If you guys want to see videos on any specific stock in here, definitely let me know in the comments below. Hopefully, I didn't go over that too fast. I tried to give a little bit on my bullish thesis on each one of them, but obviously, it's just a video that I'm giving a bit of an overview. And it's probably a little bit different than my normal videos. This is a little bit more chill. At least this part of it anyway, just me talking about each position. So let me know if you like videos like this as well. It could be interesting to make some more content along the lines of just kind of sitting, talking. It's a little bit more chilled, not as highly edited, I guess, but at least this portion of the video anyway. I would love to hear what you guys think of my strategy or how you position yourself in the markets. I've never really got a lot of feedback on my portfolio from other investors. So tell me what you think. Leave a comment below. If you got any value out of the video, consider dropping a like and subscribing for more finance-related content. As always, I wish you the best of luck on your investment journey. Peace.